Hey, good afternoon, everyone. Welcome to today's webinar, Startup Insurance Protecting Your Growing Business, presented by CoverWallet and Early Growth Financial Services. My name is Jason Kennedy from Early Growth Financial Services. I'm going to be your moderator for today. Just a couple of quick housekeeping notes before we get started. This webinar is going to last approximately 60 minutes. That does include time for Q&A at the end of the presentation. There in your GoToWebinar control panel, you should see a questions section. If you have any questions throughout the webinar, please feel free to use the questions panel there. We'll get through as many questions as possible during the presentation. We'll have contact information up for you at the very end in case your question doesn't get answered or you have questions after today's event. The event will be recorded, so all registrants will receive a recording of this webinar within 48 hours of its conclusion. We'll also have it up on our YouTube channel, Early Growth FS, as we have all of our webinar recordings if you never need to go back and check on anything we might have done in the past. So without further ado, we'll jump right in, and I'll introduce to you Garry Smalley from CoverWallet, who's going to be our presenter today. Garry, please say hello and take it away.
Hello, everyone out there. My name is Garry Smalley. I am the sales director here at CoverWallet. And we are a insurance company. We are web-based, and we look to help small businesses and growing businesses with their insurance needs. We are able to give you advice, help you get quotes, and bind policies, as well as manage your policies all in one place. Now, a little bit about myself. I've been in insurance for about 15 years. I'm an underwriter. I was an underwriter in the past. I'm an insurance broker who actively sells commercial insurance. And, here at CoverWallet, like I mentioned, we are looking to help, businesses with their growing insurance needs. So let's get started, shall we? The question that many people ask is, do startups need insurance? Well, that's a trick question because, of course, you need insurance. Insurance is often necessary, whether legally or contractually required. So, for example, if you own commercial trucks and you're using to transport merchandise, well, the law says that you must have insurance to operate that vehicle. Or, for example, a contractual requirement may consist of the leasing of a premises to open your restaurant. So the owner or landlord of the building will say, hey, I need you to show me proof that you have insurance in place as a condition of you occupying this premises. Coverage can keep you in business after an unforeseen event that causes a financial loss. Many times, business owners, we focus so much on marketing and sales that we forget about the things that could actually end our business. What if a customer comes into your location and slips and falls, or something falls off the shelf, hits them in the head, or one of your employees does something that causes injury to one of your customers? Well, in those situations, you could be found liable, and you would need insurance to protect you in a loss of that magnitude. In addition, if someone did file a claim against you, you would have to go out and find a lawyer to help defend you, et cetera, et cetera. But when you have insurance, you simply would send that claim information to your insurance company, and they would have lawyers represent you against this third party to help mitigate or lessen your responsibility in the claim or remove any liability from the claim altogether. And finally, the question isn't whether to get coverage, but more importantly, which policies are right for your business. So hopefully after this presentation, you will feel like a well-informed business owner and entrepreneur, and you will have some idea about the policies and coverages that may work best for you. So let's take this insurance journey, shall we? And look at some of the common policy types. Before we do that, I just wanted to discuss a few key terms that will help you with your insurance knowledge and help you understand a little bit more about how insurance works. The first key term that I wanted to discuss is indemnity. That's what insurance looks to do. It looks to put you back to where you were before the financial loss happened. Not in a better situation, not in a worse situation, but where you were financially before the loss happened. The second thing I wanted to mention is first party. So typically, when you hear first party, it refers to insurance coverages that pays the named insured, meaning you, the business owner. So if there's a fire in your premises and your business equipment is damaged, a property insurance policy would pay you to replace or repair that damaged equipment. Next, I wanted to focus on the term third party, which refers to insurance coverage that pays the injured party or the person who was injured due to your negligence. So someone, like I mentioned before, walks into your premises, slips and falls. Well, they may have grounds for lawsuit, whether it's for the medical bills, the pain and suffering that may come out of that. But your liability policies that represent you, like a general liability policy, for example, would pay that third party in situations where you're found negligent. And the final thing that's very important is, what is a peril? Now, on property policies, perils are the things that may cause the loss. So that is very important when you're looking at the type of business you're in. What things may actually cause loss to your property? Common property perils are fire, windstorm, riot and civil commotion, fire, and there are common exclusions to policies as well, like earthquake and flood and things of that nature. So it's important that you understand which perils may cause a loss, because if the peril is not covered on your policy, if that thing caused the loss to your property, then guess what? The insurance company is going to say, no, we're not covering the claim. All right, so let's look at some common policies and which policies may be right for you. So we're going to discuss briefly commercial property policies, general liability policies, the business owner's policy or BOP, workers' compensation, which is important if you have employees, commercial auto. A new big one is cyber insurance. We hear about cyber breaches every day in the news. Also, professional liability, which covers your professional opinion when you are helping as a consultant, for example, or as a real estate broker, for example. You make a mistake in what you're advising your customer, this policy would protect you. Marine insurance, which covers property in motion and moving around, like your cargo and things of that nature. And finally, the umbrella or excess policy. This policy would cover above your primary policy to ensure you have enough coverage to pay out large claims. Let's begin with the commercial property policy. So it provides coverage for the building itself, the actual building structure. Now, it would cover for damage to the policyholder's building caused by a covered peril like fire, lightning, or windstorm, which windstorm could be a tornado or hurricane. It would cover damage to any improvements or upgrades made by the landlord. So the landlord has a 5-story building. He decides to renovate one of the floors to make it conducive for a consulting company. Well, those upgrades, because the landlord made them, will be covered under the building coverage. In addition, and finally, you would have damage to property used to service the building if it is not covered somewhere else in the policy, like your fire extinguishers and your if you have a big lawn or big landscape in front of your property, the lawnmower that you use, things of that nature can be covered there. Now, next week, look at the business property coverage, which is also a part of your commercial property policy. Now, the business property coverage would cover, of course, any of the business's merchandise, business equipment, tools, etc. It would also cover any improvements to the space done by the tenant. So if you say, I want to rent this space from you, Mr. Landlord, but I'll pay the cost to renovate the space, that coverage would be a part of your business property coverage because you do not actually own the building itself. And again, damage to property used to service the building can also be covered under the business property section. Finally, and a coverage that is many times overlooked is the personal property of others. Now, this covers you if you have the property of others in your care. So people drop off their cell phones for you to do repairs, or people bring their laundry to your dry cleaners to have it cleaned. Well, if there was a fire in your your electronics store or a fire in your dry cleaners, the property of those customers would have to be paid for by you. And you would need to have the damage to the property of others coverage or personal property of others coverage to cover that claim. Without it, the insurance company will not pay out to your customers whose property was damaged while it was in your care. And also, it would cover the personal property of the owners and employees if something were to, something were to happen like a fire and their property was left in the building. Now, another piece that is very important to the commercial property policy is the business income and extra expense coverage. This would cover the loss of business income. So if your building had a fire or your, property inside, merchandise was damaged by, a hurricane. Well, if that's covered, then the loss of income that may result from this will be covered as well. You may be out of business for 2 weeks while repairs are done, or 2 months while repairs are done. And the extra expense would pay any extra cost to keep you open at that current location or to move you to a temporary location while your current location is being repaired. So an example of that would be maybe, you're a school and there's a fire in your basement which damaged your boiler. It's the middle of winter, so you have no heat. The extra expense coverage would pay the cost to put, heaters in your classroom so you can continue to have class until the basement repairs are done. Okay. Now, commercial building and property, like I mentioned, is a first-party coverage paying you for your property. Well, many times you have a third party that may, like we mentioned, want to sue because they were injured due to your negligence. And what is negligence? Looking at the key terms here, negligence is failure to protect a third party from injury when you are responsible. So if you own a restaurant and someone is food poisoned, you're responsible for that. You're negligent. Okay, you had a responsibility to protect that person and you did it. Now, a general liability policy will cover bodily injury, which are third-party injuries caused by your negligence, which would be like medical bills, lost wages and pain and suffering, etc. It would also cover property damage, damage to the property of a third party caused by your negligence. Someone falls in your store and breaks their cell phone. The damage to that cell phone is property damage. Now, your general liability policy will also have 2 limits, which are very important for you to understand. The first is the aggregate limit. This is the most the policy will pay for all the claims that happen during the policy period. So every time you have a claim, that aggregate limit will reduce. The second limit you must be aware of is the occurrence limit. And this is the most the policy will pay for any one claim. So
Gary, real quick, if I could jump in. Sorry, a
Sure.
question here that's come in. A lot of the companies and founders that are attending this are pretty early stage, but they're going to be looking at jumping into their own commercial property at some point as they grow.
Okay.
For commercial property policies, is that a given expense? Like, is that required for leasing a space? Is it required only for purchasing? What does that typically look like? And what should, like, early stage companies looking to get into their first space, what should they be looking for there?
Well, a company looking to get into their space early will be looking at typically the requirements of the landlord. And the landlord will typically require that you have general liability. The landlord, of course, isn't going to be concerned with your property inside if something happens to it, but they want to make sure if someone is injured in your premises that you have coverage, because when someone is injured in a property, like say someone walks to a pizzeria and falls down, they're going to sue, their lawyer's going to sue the pizzeria and the building owner. So the building owner is, to layer himself or remove himself from any potential liability will require you to have general liability coverage. Now, if you're leasing property, like say you're a restaurant, you're going to be leasing large refrigerator units, the company you're leasing these refrigerator units from may require you to have property coverage because they're going to leave their property with you. And if something happens, they want to be able to recoup the money for that damaged or destroyed merchandise. So again, if you're moving into a space and you want to keep your expenses down, you definitely want a general liability policy. Again, that's going to be typically the requirement of the landlord when you move in. But if you have you're leasing equipment, things of that nature, or you have a lot of merchandise or expensive property inside of your premises, then you want to look at getting a commercial property policy.
Okay, great.
I hope that answered the question. Yes. Now we're going to be talking about another policy after we can finish the general liability, which is the business owner's policy. And that will combine both property and general liability all in one policy, but it's for your less risky businesses. And we'll talk about that in a few moments. All right. So let's look at the commercial general liability policy and what it covers you for. All right, like we mentioned, the general aggregate is the most the policy will pay in total for all claims that occur during the policy period. And this is going to cover you for your premises, meaning anyone injured on your premises, or anyone injured as a result of your business operations. It would also cover you for personal injury, like, wrongful arrest. One of your employees detains a customer because they suspect them of stealing something, and then the customer wants to sue. Well, that's a personal injury, and your policy will protect you from that. Or if you, make a false statement about a competitor in an advertising or marketing piece, and that competitor wants to come after you and say, hey, you caused damage to the reputation of my business, that will be advertising injury, and it's also covered. It would also cover medical. Someone slips and falls on the premises, and they just say, I hurt my knee, I have these medical bills. Medical bill will pay out specifically for the medical injury. And finally, damage to any premises rented to the insured, known as damages to premises rented to you, or fire legal liability. So if you are not the building owner, you won't have building coverage in your property policy. But as a tenant, if you do something in your commercial space to cause damage to the building, well, the damage to premises rented to you would pay out the building owner to help recoup or repair the damages you caused. So again, the general liability policy is typically what the landlord will require you to have when you're moving into the premises. A common limit that may be required is a $2 million aggregate limit, $1 million occurrence limit. That is pretty standard right now in the industry for your more common risk like a store or a restaurant and things of that sort. Another piece of the commercial general liability policy that is very important is products and completed operations. This is the most the policy will pay in total for all claims during the policy period that arise from the product sold or work completed by you, the insured. And many people don't know this, but the law states that any manufacturer, distributor, or retailer may be found liable for injury to third parties which arise from the products they sell. So, for example, if you're selling battery parts for cell phones, if the person takes the cell phone home and the battery blows up in your hand, well, that person has a right to sue the retail location where they purchased the battery, the wholesale or distributor, and the manufacturer. Now, what will happen is in the court proceedings, they will work out who actually caused the battery to explode. Was it a manufacturer issue? Was it the distributor storing the batteries in an environment that was not conducive to their continuing to work properly? Or was it the retailer who had a bunch of boxes, heavy boxes stacked on top of the batteries, causing them to malfunction? So in any case, because you are named in the suit, you need products liability so that your insurance company will defend you against a products claim. So again, if your business is selling products, whether you're the manufacturer, the distributor, or the retailer, it is imperative that you have products and completed operations on the policy. Now, let us have a look at a business owner's policy. This is, the more simplified version, because the general liability policy is separate from the commercial property policy. And so many times you have to go and get both of those. But if your business is a more common business, like a retail location, a motel, electronic stores, things of that, a clothing store, many times they would actually fit in a policy that will combine both the general liability and the property under one policy, which is more simplified for the customer. And as opposed to having two policies, you only have one. If you see here, it covers the same things: general liability for premises operations, products and completed operations, bodily injury and property damage, personal and advertising injury, and medical. And the property coverage covers building, business property, business income, and extra expense. Of course, those are the things that need to keep your business in business after a loss to your property. Another very important policy that many people are not aware of because it's fairly new, and in insurance terms, 20 years old is pretty new because we typically work with hundreds of years of historical data. But cyber liability coverage, known as CLIC, is often used to describe a range of first and third party coverage, which covers you against cyber breaches. And a few examples include data breach or privacy crisis management coverage, extortion liability coverage, meaning someone hacks your system and encrypts all your data and says, hey, you must pay something to us in order for us to give you the key to unlock your system so you can have access to your data again, multimedia and media liability coverage, as well as network security liability coverage. So, a breach of your network somehow causes loss or damage to customer information. These policy coverage parts will protect you from that. And many times, people don't take the cyber policy because they feel they don't have a need. But again, understand that hackers are out there and they're constantly looking to take advantage or gather information. And cyber crimes have become more and more popular just because it's not considered to be a violent crime. Someone can sit at home for days and slowly gain access to someone's system, getting customer information, and it's much different than someone years ago running into a bank with a gun trying to steal money. So they steal money differently. They steal information differently. And people are really attacking companies through cyber. And it's very important to have the coverage because if you have a breach and you look to get coverage, it's probably going to be too late. Now, look at some quick facts. Cyber attacks and data breach incidences are commonplace and make headlines daily. Look at this next bullet. 256 days is the average time it takes to discover a cyber breach. So that's almost a year before you'll realize your information has been compromised. $200 plus is the average cost incurred per record lost or stolen. So imagine you have 500 records on your database and you're breached. That can be a huge deficit in your bank account because that's a lot of money that you have to pay out. And now state governments are requiring notification to the customers who had their information breached. You must provide them with a year of identity theft protection, et cetera, et cetera. So these things can cost a small business dearly. And many times when a small business has a data breach, they're out of business within 3 to 4 months. Also, more and more companies and government agencies are making cyber insurance mandatory for vendors. So as of recent, I do a lot of work with nonprofits who get grants and funding. They work with, state and federal government entities. Now, or in times past, the government entity or state entity only required you to have general liability and workers' comp. Well, now we're seeing a lot more of these entities requiring general liability, workers' comp, and cyber insurance as a condition for doing business with them. So this is very important that you have a look at cyber insurance. The next coverage part I want to discuss is workers' comp and employers' practices liability. And I believe, and most insurance professionals believe, that these coverages go hand in hand. So workers' comp covers employee work-related injuries. It'll cover the medical benefits unlimited. It'll cover lost wages, subject to a certain waiting period. Like in New York, you don't start receiving your wage loss benefit until you're out of work for at least 8 days. Also, a death benefit. So if someone dies as a result of their injuries at work, their surviving spouse and children would receive that income benefit. And in essence, workers' comp protects the insured from lawsuits arising from severe injuries, because sometimes there are situations where the employee injured at work may want to sue the employer because they feel their injuries were directly related to the employer's negligence. And I'll give you a quick example. When I was in college, I worked at a cigarette packing plant, and the owner of the plant would have our local custodian come in and recalibrate the cigarette packing machines so they would speed up. And it was a warning on the back of the machine that said, hey, you can't do that unless you call the machine company in to do this calibration for you. But every day he would do it, the machines would jam up and the supervisors would come and unjam the machines. Well, one day the supervisor went to unjam the machine and he came out with 3 fingers missing. So the workers' comp paid for his medical benefits right away, paid for all rehabilitation, paid his lost wage. But then the employee said, you know what? I'm going to sue my employer directly because I feel like my injuries were directly related to his negligence. And so the workers' comp policy would defend the employer in that situation as well. In addition to workers' comp, employers' practices liability. So while workers' comp covers the work-related injuries, employers' practices liability would cover the employer if he's sued by an employee for things like harassment, wrongful termination, discrimination, but no coverage for work-related injuries because that falls back to workers' comp. So these two policies work hand in hand. You really don't want to have one without the other. The next we want to talk about briefly is commercial auto and marine insurance. So commercial auto covers injuries to third parties caused by the use of a vehicle for business. So you have your trucking or your delivery people and they injure someone with the vehicle. It would cover both bodily injury to that injured person. I mean, they were hit, but they break their leg, things of that nature, or property damage. So you crash through another vehicle with your commercial auto, it'll cover the damage to that vehicle as well as the injuries to those inside the vehicle. But the commercial auto policy does not cover the cargo on the vehicle. In addition to that, when we think about a commercial property policy, it only covers your property when it's on premises. So if your property moves away from your location, it is no longer covered. Marine insurance is what would cover that. It provides coverage for property away from your business location. It provides coverage for property being shipped like cargo. And it provides coverage for special property that needs to be listed with a specific dollar amount. Like it can cover, if you have a giant antenna or you have neon lights on the front of your building and things of that nature, they can be covered under marine insurance. So remember, the commercial auto policy will cover your vehicle, but it does not cover merchandise on your vehicle. The marine policy would cover the cargo on the vehicle as well as any of your business property when it is away from your business premises. We also want to talk about professional liability. So if you're a person that's required to have a license, like a real estate professional or an insurance professional, a consultant, you are giving advice to people based on your knowledge, your specified knowledge. Well, if you make a mistake in giving this advice, you can be sued for that. So professional liability typically comes in three forms: errors and omissions, which protects business professionals; malpractice, which protects medical professionals; and directors and officers insurance, which protects the board members from lawsuits. So if you're in any of these fields where you have a license or you're giving advice like an accountant or a tax preparer, you want to make sure you have professional liability. If you're a doctor, a pharmacist, a dentist, you want to make sure you have malpractice insurance. And if you have a board of directors, you want to make sure, or if you're on a board of directors, you want to make sure the entities who board you're on has a directors and officers policy in place to protect you personally from any lawsuits. Just a moment. And finally,
Gary, real quick, a question there around professional liability. Do you typically see,
sure,
like, you know, in the early stage game, there's a lot of consultants
yes,
working in this business, both to help with early stage companies, and then there's early stage companies that their job is to be a consultant of some sort. Is this a typical type of policy that you see with those kind of consultants?
Yes, we do. We see tons of consultant policies because as you begin to get larger projects or get projects from people, they're going to require that you have it because they just want to make sure that you're committed to what you're saying and that if you make a mistake, you know, they have some type of recourse. So yes, we see these consultants getting professional liability policies all the time. It is highly recommended.
Thank you. Very good. Thank you.
Mm-hmm. Now, finally, we want to talk about umbrella and excess policies. Now, many times in the insurance industry, these terms will be, you know, cross-pollinated, made to seem like they're the same, but they're really a little bit different. So an umbrella policy provides excess coverage above your existing third-party liability policy. So your general liability policy may have a $1 million limit, and say your contract requires you to have $5 million. Well, you would have $1 million from the general liability, and the umbrella policy can go on top of that and give an extra $4 million, so you would have the entire $5 million requirement to meet the contractual needs. So when an umbrella policy is operating above a primary policy, it is known as providing excess coverage. But one thing that an umbrella policy may also do is it may extend coverage to third-party claims not covered by the primary policies, which is a unique feature that an excess policy does not have. But when your umbrella policy, if it ever operates from an extended capacity, meaning it's covering something that is not, it's covering a loss that is not covered by your primary liability policy, you as the insured must pay what is called a self-insured retention. It's almost like paying a deductible. It's like, hey, all right, the umbrella policy company is expecting a primary policy to pay out, but there is no primary policy going to pay out. So they're going to say you insured must pay some dollar amount first, and then we will begin to cover above that. So an umbrella policy can operate from an excess capacity, meaning operating above your primary policy, and in instances, it can extend coverage to cover things not covered by your primary policy. But again, if it's extending coverage, you must first pay an SIR, a self-insured retention. An excess policy only provides coverage above your primary third-party liability policies. And they can come in two forms. A follow form, which says, hey, you know what? If your primary policy is covering it, we're going to cover it too. Or an excess policy can be standalone. It'll say, you know, we're going to cover one or two things your primary policy covers, but not everything your primary policy covers. And based on the need of the business to control cost, a standalone excess policy may be better suited for you. So an example of that would be a contractor who works with pollution oils and things of that nature. So he's demanded to have pollution liability at $5 million. Well, he might have a $1 million endorsement on his general liability policy for pollution, and it also covers products, and it also covers, premises operations. But he only has a specific need for elevated limits above the pollution portion. So he would get a standalone policy that would say, listen, we're only covering anything above the limit that deals with pollution. So that can help him or her cut their cost for the excess policy. And lastly, the excess policy does not extend coverage. So it's either going to follow the primary policy or cover one or two things the primary policy covers. But in no means will it extend coverage to cover things that the primary policy excludes. So to wrap up, insurance is a need for all businesses, whether you're starting in business or you are seasoned in business. And I'll tell you something else too. When you're starting in business and you're bidding on projects, you're trying to win jobs, it is a good representation of your business when you can show the potential client that you have insurance in place now. It makes you look more professional and more serious. If you have to run it and try to get insurance to meet the criteria of the contract, many times customers feel like, maybe I'm the first person you worked with and it can cost you to lose that opportunity. So again, it's always great to have insurance in place so you can show a seriousness about your business and about your professional or business capacity. And if you have any questions, you can feel free to visit our website, www.coverwallet.com, where you can get advice, manage your policies, and get quotes quick, easily, and instantaneously. Any questions?
Yeah, we've had a couple of questions come in around the same topic, so I'll try to generalize it. But at what point does, again, we keep talking in the context of early stage companies, at what point should they be looking for insurance for their business? And for, if they're a consultant or if they have, hard property, brick and mortar, whatever that is it as they're forming their business or as they begin to sell their first, services or goods? Like when should an early stage startup founder engage with someone, like CoverWallet to start talking about their insurance options?
Well, I would engage in the planning process, actually, because insurance is an expense that is required in business. And many times business owners, when they're starting, they don't think about the insurance expense. And so when they go to shop for it, they're like, wow, I didn't realize it was this expensive. Or sometimes it can be a type of risk that's really unique and challenging to find coverage for. So it may take some time for the insurance company to find the proper coverage for you. But needless to say, I would say you need to input that into your business model right away in the beginning, because, like I said, it makes you look more professional to clients. It's an expense that is necessary in doing business, so you need to account for that. And thirdly, you want to make sure that you have the insurance in place before you're selling any products, because insurance is only going to cover you from the time you start. So if you have products out there in the field, then you start insurance later and someone sues you from a product you put out last year, your insurance policy will not cover that because that product was sold before your policy was put into place.
Okay, great. Another question that's come in is around subcontractors.
Yes.
Particularly around subcontractors and workers' comp. So is there some sort of policy that needs to be in place to protect the employer there in the event of injury, or what do you typically see out there in that instance?
Yeah, so a lot of times when it comes to the workers' comp, we see that with construction and things, people doing construction, installation. The fact of the matter is, if you're a contractor and you're hiring a subcontractor, or if you're a business owner hiring a contractor, you want to make sure they have general liability and workers' comp for their employees. I can't stress that enough, because if an employee is injured on your premises while they're doing working for the contractor, if the contractor doesn't have workers' comp, you can be named in a suit. You don't want that. You want to make sure that you have vetted this contractor properly and made sure they've had the proper coverages in place.
So would essentially the general liability policy help protect you in the event that a subcontractor is injured and the contractor did not have the right coverages in place?
That's correct.
Okay, awesome.
Especially if they can prove that their injuries were caused due to your negligence or something like that. So it's just better to make sure that whoever you're hiring to do work for you has general liability, they have workers' comp, and if they're going to have access to your computer systems, make sure they have cyber insurance as well.
So that's a great segue into our next question here. So what about software companies? Have you worked with a lot of, SaaS is really big right now, but software companies in general, are there particular policies like cyber insurance that are pretty typical for those kind of companies?
Yes, anytime you're dealing with any type of computer software, computers in general, you want to have a cyber policy in place. What if the hacking is a customer hacks in or a third party hacks into a system and it's like, wow, your software was the means in which they gained access. Anything like that, you want to make sure that you have coverage in place to protect you, because cyber policies or cyber claims can get very expensive very quickly. And more importantly, once you have a claim, the cost of your cyber policy moving forward will be 30 to 50% higher than what it was prior to that.
Now, do you typically see for these general liability, for these founders and maybe first-time entrepreneurs, what kind of, even if you could get the broadest of cost range, what, like on a monthly basis, for an early stage company that's, let's just say, less than 10 employees, is there like a typical cost range, like for monthly premiums for, the typical insurance policy?
That's a really tough question to answer, because insurance, depending on what type of industry you're in, the cost can vary dramatically. So for example, if you're a real estate office, very low risk, you might be paying about, $800 to $900 a year for general liability for your space, another couple of maybe $100 or $200 extra for your property inside. Very low risk. However, if you are, a construction company and you're dealing with general liability, well, there's a lot more likelihood for injury. If you put a wall up and it falls down later, that can be a tremendous loss to a third party and bring you into a huge lawsuit. So it ranges depending on the industry you're in. And that's true for the general liability as well as workers' comp. Workers' comp in the accounting office is much less than workers' comp for a construction company.
A lot of what we see in this business, and we've had a couple of somewhat related questions around this, so again, I'll try to generalize, but around intellectual property. So, especially in the tech world right now, it's all about innovation. So it's about new ideas, new technologies, new methodologies. Have you done a lot of work with intellectual property insurance? I've heard it called defense coverage in the past. Do you have any experience with that? And can you talk a little bit about that?
I don't have tons of experience with that, but my information is on the last slide. If you feel free to email me specific questions, I do have industry professionals that I work with that can get me the more accurate answer that you may need, and I can get that back over to you.
Nice. And a final question that I'll ask here before we wrap it up. What are common pitfalls for small businesses, early stage companies, startups, that are still that kind of, very beginning stages of building their business? Do you have common, pitfalls or things to avoid that you can share with the group here?
Yes. The more, when it comes to insurance, the more focused your business is, the easier it is. It'll be to find coverage, and typically the less expensive the coverage will be. Many times we get, consultants or people in the industry that want to do, their business does several different things, and it creates an issue from the insurance company standpoint. They're saying, wow, this person is, a jack of all trades but master of none. So their likelihood of having a loss is greatly escalated. And so either insurance companies may not want to write it, or if they are writing the policy, it's going to be really high premium. So I would say be more focused in what your vision is of your business so that you can clearly outline the things you will be doing to your insurance company. That's a great way to help you control your premium. And that's something that we see a lot. Don't be too broad in what it is you're doing.
Awesome. That was really great. Garry, thank you again for taking the time to present with us today. This is all super helpful information. And as a reminder to everyone, we'll record this presentation, so if there was anything you missed, you can go back and view that. We'll send that out to everybody. And then, of course, Garry's contact information is at the end of the presentation as well, in case you'd like to reach out to CoverWallet and get some more information specifically about how they can help your business and incorporate some, the proper insurance policies and coverage for your company. So, Garry, thanks again for joining us today. I'll wrap it up here, and everyone else have a great afternoon and a great rest of the week.
Thank you very much. Have a great day, Jason, and everyone in Tech World. Thanks for listening, and have a great day.